What if the world ran on promises to pay later? Right now, the total amount owed by governments, companies, and households worldwide is bigger than twice the size of entire global economy. In plain terms, the world's debt is so large it adds up to roughly $250 quadrillion. This isn't just a story about danger. It's also about how modern economies work and how borrowing, used wisely, can build the future. Governments borrow to keep schools open, hospitals running, and to build things that last: road, metros, power grids, water systems. Companies borrow to lay fiber, put up cell towers, build factories, and fund research. The money mostly comes from savers, retirees through their pension funds, insurance companies, mutual funds, and banks who want steady, reliable return. Debt is the bridge that moves savings into real projects. Here's the first jaw-dropper. Global public debt alone hit about $102 trillion in 2024. And when you count governments plus companies and households together, total debt above 235% of all the goods and services the world produces in a year. That's the scale we live with, huge, complex, and woven into daily life. Which countries owe the most in pure dollar terms? The United States stands at the top with roughly $33 trillion of government debt. By far the largest stock because its economy and bond market are the biggest. China follows with about 14 trillion. Japan is near 11 trillion. In Europe, France and the United Kingdom each sit around the mid 3 trillion range. And a fast-moving India is near 3 trillion. These are deep, liquid markets where even a tiny move in interest rates can shift billions in annual costs. In the corporate world, the biggest borrowers are often the ones building the biggest, longest life assets. Global automakers like Toyota and Volkswagen regularly top the list because they also run in-house financing businesses for car buyers. Each has well over $180 billion in total debt. In telecoms, AT&T and Verizon carry roughly 170 to 180 plus billion, reflecting decades of investment in spectrum, fiber, and mergers. Utilities and grid operators borrow heavily to finance power generation and networks that last for decades. Debt here isn't a gimmick, it's the tool that lifts projects too big for cash alone. Now the part that quietly squeezes budgets: interest. When interest rates are higher, rolling old debt into new debts gets expensive. For developing countries, pressure has become a daily reality. In 2024, governments across the developing world paid about $921 billion in net interest on public debt. In many places, interest now eats a double-digit share of government's revenues, sometimes more than the country spends on health or education. The bottom isn't just about size, it's about who can carry the weight at what interest rate. So, is debt the villain, or is the real question what we do with it? Debt is a tool. When the return is higher than the rate, borrowing actually makes the future easier to afford. And when a recession hits, borrowing can act like a bridge across a storm, helping families keep jobs and businesses stay alive. Where does risk build up? When a debt grows faster than income, when borrowing is short-term and must be constantly refinanced, when it's in a foreign currency but earnings are local, creating painful mismatches if the exchange rate moves. Hidden obligations like off-budget local entities or guarantees can swell in the shadows. For companies, the danger is high debt combined with falling profits or floating rate loans that reset higher. Debt itself isn't good or bad. The structure, transparency, and purpose decides whether it empowers or endangers. There's a brighter side worth focusing on. The world's savings are enormous and looking for long-term productive homes. Well-designed borrowing can transform those savings into the charging stations, data centers, clean water systems, and public transit that growing economies need. Safer design is possible. Stretch out maturities so fewer loans reset every year. Borrow more in local currency to reduce foreign exchange shocks. Make hidden liabilities visible so investors can price them honestly. And channel borrowed money towards projects with measurable high economic return. Yes, the numbers are shocking. Total debt debt above twice the world's yearly output, public debt at around $102 trillion, developing countries paying roughly $921 billion a year in interest. But the story isn't written in stone. The same mechanism that can weigh us down can also lift us up. If what we build with borrowed money pays tomorrow's bills, that's the choice in front of us. Danger and design side by side. Borrow wisely, build productively. Grow faster than you owe. Tell us what you think. Is this a visionary move or just another burden dressed up as generosity? Like, share, comment, and subscribe. And don't forget to follow WantStats on Instagram and X for stories that dig deeper than the headlines. Stay tuned to WantStats for the news that matters.